Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 5th, 2022, and this is a special sort of instructional video on how to read Elliott Wave for beginners, okay? I was just looking at Bitcoin's price action, and it struck me just how textbook this price action was on the smaller time frames. I'm on the 15-minute chart. So I thought, instead of tweeting about this, I'd much rather just make a proper video for everybody to use. Now, understand that you do not have to be trading crypto for this to be applicable. You can apply Elliott Wave theory to any openly traded asset, okay? It could be gold, it could be silver, it could be stocks, it could be crypto, it doesn't matter. Any openly traded, any asset traded on a free and open market should follow the principles of wave theory, all right? And so I'm going to quickly give you a breakdown as best as I can about how to read Elliott waves. Obviously, it can get much more complex. It could get a little more involved than this, but the basics, the rudiments of reading waves are the following. All right. So again, I'm looking at Bitcoin. You can use any asset. I'm on the 15-minute chart. Elliott waves. Great thing about them, they're completely completely time frame agnostic. So it's completely fractal. What you see on the 15-minute chart, if you wait long enough, you'll see on the hourly and the 4-hourly and so on and so forth. All right. And the other thing I'll say is that this pattern that we're reading, this motion, just so happens to be going up. Okay. So we happen to be looking at an uptrend and a retracement going down. You can have the opposite and it could be just as valid. So we could be looking at a downtrend and then the retracement would be going up. And that's exactly the same. When you're talking about impulse, it doesn't matter whether it's up or down. All right, let's get started. Now, I'm going to just make bold the portion of the waves that I want to talk about. So in Elliott Wave theory, a lot of people know this basic principle that you're dealing in 5 wave patterns when you're talking about impulses. All right, every impulse, let me erase this. Every impulse happens in 5 waves, okay? So you see here, I have 5 waves, all right? What's very important in reading the 5-wave sort of advance is that you can't violate any of the rules. There aren't that many rules in Elliott Wave theory, yet and still people seem to violate them all over the internet. But understand this. The 3rd wave, which I have here, usually is the longest and the most impulsive, but doesn't have to be the longest, but it just can't be the shortest. That's the first most important rule. The 3rd wave can't be the shortest, okay? Secondly, the wave number 2 can never go beyond the origin or origination point of wave 1, right? So wave 2 typically retraces between the 382 and the 618 Fibonacci retracement. Okay, I'm just going to get out this tool, Fib retracement tool, and you can see here the retracement of wave 2 is between the 382 and the 618. That's where you typically see wave 2 retracements, okay? And it's very, very, very rare that you ever see wave 2 retrace beyond 618. Actually, it's very rare that you see anything in an impulsive wave. If it's an impulsive wave, meaning it's going up or down, you can typically tell very easily. Even if you don't know anything about Elliott Wave, you can just tell that the price is moving. That is what we call in Elliott Wave theory an impulse. And in any wave, within an impulse, it's very rare that you see any retracement beyond the 618 or Fibonacci golden mean of a prevailing move. So if I took wave 3, the retracement of wave 4 could never go beyond the 618, okay? Even in a leading diagonal or an ending diagonal or one of those sort of more advanced moves that you see, okay? So just know that wave 2 typically retraces between 382 and 618, okay? Now, you got wave, so the rules, wave 3's typically the longest, doesn't have to be the longest, but can never be the shortest. Wave 2 can never come beyond the origin of wave 1, and wave 4 can not come in the region of wave 2, okay? And that is typical. Sometimes it's possible in a leading diagonal, ending diagonal, you can see wave 4 come in the region of wave 2. But typically in a regular 5-3-5-3-5 advance, right, in a typical advance like this, those are the 3 rules that you want to maintain, okay? So that's your 5-wave advance. And once you get your 5 waves and you count your 5 waves, know that the trend is complete, okay? That trend is complete and it needs to be retraced upon. Now, then you get a flavor of 3-wave retracements. There's so many different types of retracements, and that's, the more advanced side of Elliott Wave theory that, beginners don't tend to know very well because it does get a little more complex. But here, let's just use our example and focus on this retracement right here, which is a regular flat correction, okay? It's actually called funny thing, if you see a flat correction like this is actually called an irregular flat correction. It's because you don't typically see a flat correction to be this symmetrical. Typically, you see these flat corrections do this, where they're kind of extending the one of the legs is extending beyond the baseline of the first inflection. Okay, so you typically see something like this. This is typically what you see. When I say regular, I just mean a run of the mill. Okay, but technically speaking, this would be an irregular flat. Or technically speaking, this would be what would you call this? Would it be a running flat? Yeah, I think it's called a running flat or something like that. I should know this, but this is what you typically see. You typically see your C wave go beyond the base of your A wave, okay? And, whatever it's called, you get 3 waves, and that's very, very, very important. You want to see that, okay? And that basically ends your retracement. And then the other thing I want to point out is that the last wave of this retracement always has 5 waves, okay? So we're on the 15-minute chart, and actually, for the purposes of this video, I'm just going to stay on the 15-minute chart. I don't want to confuse anybody, but just trust me on this. You get 1, 2, 3, 4, 5 waves. If you zoomed in close enough, you would see 5 waves. You'd see a 5-wave impulse in that C wave, okay? The last leg of any retracement, whether it's an ABC retracement or a complex, double 3 or triple 3, WXY, WXY, it's always impulsive, and you get your 5 waves. Remember, every impulsive move happens in 5. The other point I want to make about this flat correction on this 5-wave impulse is that if you take the Fibonacci retracement of the 5-wave impulse from the beginning to the end, look at where the end of the impulse is. It's in your golden pocket between the 0.5 and the 618. Remember what we said, that wave 2 typically ends between the 382 and the 618, and that's exactly where this flat correction ended, right between the 382 and the 618, closer to the 618. This is what you typically see, right? In my experience, if you get wicking beyond the 618, it's fine, just so long as it doesn't wick beyond the 50% level of the 618 and the 786, just in my experience, okay? So that's how I look at it. So you got your 3-wave retracement that signifies the retracement of this 5-wave structure. Also, because it respected the 618, you know that this trend, whatever it is valid. And what you want to do is you want to keep counting until you get 5 of these. So this is 1, that's 2, you're going to get 3, 4, and 5, and then the trend is over, and then you do get another one of those. Do you see what I mean? It's fractal, okay? So now, what is this? And this isn't something that I didn't learn until much later in my career, right? And so I'm giving it to you now. If you're getting value, please like, share, and subscribe. Very few people talk about this. You can go on a lot of different Elliott Wave instructional videos on the internet, and maybe none of them will discuss what I'm going to discuss right now. And, it shouldn't be relegated to an advanced topic because you see it so often. It is just part and parcel of what you get in regular price action. So I want to discuss it. And Ralph Nelson Elliott, the progenitor of Elliott Wave theory, himself discussed this in his treatise, Nature's Law, The Secret of the Universe. Look it up on Amazon if you'd like. He mentions it very briefly. Also, Bob Prechter and AJ Frost, in their seminal work, The Wave Theory, right, which I recommend for advanced learners of Elliott Wave, they also mention it, but they say that it's bullshit, which I completely disagree about. Because what do you make of this, right? What do you make of that? So you got 5 waves up, 3 waves. Whoops. Let's get rid of this. We don't need it right now. You got 5 waves up, 3 waves down, okay? According to Bob Prechter and AJ Frost and most sort of adherents of, popular Elliott Wave theory, now you just go up. But that's not what happens in real life. If you look at charts as much as I do, if you work with with price action as often as I do, you see this over and over and over again. And on the larger time frames, it's even more prominent because it takes a while. And this is what we call an A-B base. It's essentially, think of it like this. You decide to change direction, right? So you put in this impulse, and the direction of price action, the trend for this impulse is down briefly, right? The larger trend is up. You decide, okay, you're going to go back and change direction and go back up. There's a process to that. That's what A-B basing is. It's preparing the price, preparing the asset to go back in a certain direction, okay? And so that's what we're going to look at here, all right? Again, guys, if you're getting value, please like, share, and subscribe. I talk about Elliott Wave every day, pretty much, on my daily Bitcoin update channel. And so here, let's focus on this. Right here, you have, I pointed out a few moves, and I'm going to keep this as simple as possible too, because this can get hairy, but there's a simple way to understand A-B basing. From my experience, and there hasn't been, I haven't seen many studies on A-B basing. Most of what I know from A-B basing is what I've done in my own research, what I've done in my own practice, right? I'm a professional trader, by the way. This is what I do for a living. You need 2 degrees of A-B basing before actually completing this process, okay? And let's also take time into account, because Elliott Wave theory allows us, it understands that you're not just dealing with price here. Sorry, one second. I did something silly. Okay, here we go. You're not just dealing with price, okay? You're dealing with the time axis, okay? So you kind of understand that time is a factor. So all of these, I know this can be a little advanced, but I'm throwing all of this at you right now. Even though you don't pay attention to it as a beginner or an intermediate user, just be mindful that this exists. You see that we took 8 hours for this 5-wave advance, okay? Look at the time it took for the 3 waves down. 7 hours. Almost approximately the same time it took for your 5-wave advance. That is not an accident. You typically see that, especially in wave 1 and wave 2. You're welcome. That took me so long to figure out. So long. And it helped so much because it gives you context and, anticipation. When can this ever end? You have a 3-wave sort of advance or a 3-wave of retracement. Is this retracement finished? Is there more to go? You typically see some parity. Not always, but typically, especially in wave 1 and wave 2, there's a principle. Bob Proctor and AJ Frost called it the principle of equality. I call it, they call it the guideline of equality. I call it the principle of proportionality. All right. I'm not going to get into that right now, but I wanted to point out the fact that this took 7 hours, or this took 8 hours. This took 7 hours. Your AB base will take some time. So far, and I think we're pretty much done, and I'm going to show you why I think we're done, it's taken 5 hours. So again, for those of you under the impression that AB bases don't exist, and after your 3-wave retracement, you just go up, what do you make of this? How do you explain this away, these 5 hours of price action? What do you say to that, right? And so, as I told you, you need 2 degrees of AB basing. What is that? All right. You need 1 degree. That's an A wave, an initial breakup structure, is basically saying price wants to go in the opposite direction as it's been going, right? So every A wave comes with a counter B wave, all right? And both of these happen to be sorts of zigzag corrections or flat corrections, probably flat corrections, maybe A is a zigzag, maybe B is a flat. There's, more or less 3 different types of corrections in Elliott Wave. And again, this is more advanced. There's flats, there's zigzags, and there's triangles. Yeah, those are the 3. Okay, so I think that here you're dealing with a zigzag, here you're dealing with a flat. That's one that's 1 degree, okay? That's why I put them in the same color. So you got A, B. I call this personally big A, big B. Now, you want to look at your 2nd degree. Again, you have an A wave, a 3-wave structure. That's a flat correction. I call this small a. And again, a 3-wave structure that's counter to that first one. I call this small b. That's your 2nd degree. After 2 degrees of AB basing, you can expect the general trend to continue, but only after 2 degrees. In my experience, having traded the markets for years and, just doing this day in and day out, this is what I've seen. So that is my little bit of sort of intro crash course to Elliott Wave theory. And in this really cool example on the small 15-minute time frame, looking at Bitcoin on August 5th, 2022, you have an impulse, you have a flat correction, and you have an AB base. Those are the main elements of price action. If you can break all of these 3 elements down and master each and every one of them and all of the different permutations and combinations of these various sort of styles or flavors of price action, you will be dangerous, absolutely dangerous. So yeah, that's pretty much it. Guys, if you got value, please like, share, and subscribe. I talk about Elliott Wave every day. And yeah, leave me a comment, let me know what you think. I love to hear that, especially for people that are more advanced in Elliott Wave. What are your thoughts about AB basing? What are your thoughts about, the market, whatever? And how useful is Elliott Wave theory been to you in your trading journey? I'd love to know. All right, take care. Bye.
The damage to begin. Wreaking havoc on their drums. We cold getting dumb, getting crazy style. Late night, height division, we be moving with precision. With 10 spots popping off, making some decision about hitting them one at a time with these ill rhymes. My love at the door, free